Hello, everyone. My name is Emmanuella. In today's session, we'll be talking about balancing the act, how to live a debt-free life and build a long-term wealth. To provide more insight, kindly post your questions in the comment box and I'll be answering them as we get along, along with the ones that you signed up with earlier. So, in today's discussion, we will be looking at why people get into debt, what to look out for, how can you make it successful, how can you come out of it successfully, how can you build long-term wealth. We will also be speaking about various investment opportunities within FBN Quest that you can take advantage of to build your long-term wealth. And I'll also be sharing financial tips as usual at the end of my session. I hope that at the end of this session, your many questions will have been answered and insight provided to you to enable you commence your investment plans towards building a wealthy future. So before we go on, let me tell you a bit about myself. I'm a certified financial planner and an investment advisor with FBN Quest. FBN Quest is the unified brand name for the merchant banking and asset management business of FBN Holdings PLC, which is one of the strongest and most dependable financial service groups in sub-Saharan Africa. So my passion in this area came really from working closely with clients and realizing that individuals and businesses all over the world most times struggle with pulling their finances together and find it very difficult planning for the future. So the satisfaction that comes with working closely with people and watching them becoming financially responsible and ultimately working towards the achievement of their goals is really what keeps me going. So that's it about me. Let me start by providing some background to our conversation today. So we had discussed on how to reach your long-term money goals and how to save and slay in our previous webinars. I'm happy to say that we received a lot of responses and people have taken it further by commencing their investment journey. You can still watch that on the She Leads Africa YouTube channel and contact us at FBN Quest if you have questions and investment options, if you just need to work closely with a financial advisor in line with your specific needs. So if you're just joining us, welcome to our webinar today. Welcome the She Leads community. We are talking to you today about the balancing act, which is being able to manage debt and build long-term wealth. So when you hear debt, we imagine that the amount of money owed or due. So anything from keeping up with payments of little debts to being able to come up with the capacity to pay off large amounts of loans, or even finding ways to pay off debt you have defaulted or requires some planning and management really. So managing debt is important in personal financial planning process, largely because of two things. If you're able to manage your debt, then you'll be able to attain your financial goals and you'll also be able to live within your cash budgets. So on one hand, loans and credits can help you achieve some of your desires by you just being able to acquire some expensive items in a systematic fashion. But there's another side to it. It is the paying back that is the issue, really. So unless credit is used carefully, the buy now, pay later attitude can quickly turn an otherwise orderly budget into a budgetary nightmare, which may lead to some serious problems in your finances. So really, the issue is one of moderation and affordability. There's debt everywhere. It needs to be taken. In today's economy, consumers, businesses, and governments alike use credits to make transactions. Loans helps businesses supply the goods and services needed to satisfy consumers' demand. Businesses take on credits to provide higher levels of employment, help raise their overall standard of living. Government at every level borrows for various projects and programs that also increase our standard of living and create additional employment opportunities. So clearly, borrowing helps fuel our economy and enhance the overall quality of our lives. However, consumers and individuals need to know how to establish debt and how to avoid the dangers of using it improperly. So if you're just joining us, welcome to our webinar today. You can drop your questions on the comment box, and I will also be answering them as we get along with the ones that you sent earlier. So why is it that people take on debt in the first place? Why do people borrow and all of that? So people will typically use credits or debt as a way of paying for goods and services that cost more than they can afford to take from their current income. I mean, if you could afford it, then you wouldn't take on the debt. So typically, because people cannot afford it, they don't want to take it from their current income, so they would go into debt. So people tend to borrow for several reasons. To avoid paying cash for large outlays. So for example, you need to buy a car, you need to buy a house, and you cannot afford it. Your cash flow currently cannot afford it, then you will find yourself taking on debt. So somehow spreading the payments over time makes big ticket items affordable, as against paying for it, bullet payments, once. And so really taking on debt will be able to help you afford expensive assets right away. Most people consider the cost of such borrowing a small price to pay for immediate satisfaction they derive from owning the house or the car that they take on the debt for, or whatever it is that it may be. So in their minds, at least, the benefits of current consumption outweighs the interest cost of the loan. But unfortunately, while the initial euphoria of the purchase may wear off over time, the loan payments remain perhaps, for many years to come. So, I mean, you enjoy the assets, but then you still have to grapple with paying down on the loan for a very long time. So people also take on debt to meet a financial emergency. People may need to borrow to cover living expenses during a period of unemployment, or just make purchases. Something comes that you haven't planned for, which is why we keep preaching the story of an emergency fund. So people take on debt to be able to meet such financial emergencies. So people also take on debt for investment purpose. So you hear that people take on mortgage to purchase a house. That's the one I actually advise people to go into. Take on debt for assets and not for liabilities. So in all of this, you will agree with me, though, that many people use credits to live beyond their means. So for some people, overspending becomes a way of life. As soon as they need something, they take on debts, they buy up something, and then they spread the payments over time. Once you're not able to pay for the item that you buy immediately, then it becomes a debt, because you're using future income to service the asset that you've already, or the purchase that you've already made. So unfortunately, people who overspend eventually arrive at a point where they must choose to either become delinquent in their payments or sacrifice necessities if they're not able to manage their debt, appropriately. So if payment obligations aren't met, the consequences are likely to be damaged credit rating, lawsuits, or even our health. I hear people saying, they're in the hospitals because of the debt they have taken on. Debt is really like something hanging on your head, or not until it's cleared off. You don't have your peace. So what am I saying? Excessive credit or loan has a way of impeding our ability to build long-term wealth if not managed properly. So it's the managing of the debt that is should be of much concern to us. I will stop here and take on some questions. Let me see what it's popping at us from YouTube. So somebody asked here that, how do I survive a low salary when there's so much bills to sort out? Okay, we'll get into the session about building long-term wealth. How do you survive a low salary? I say that when you do your analysis of your financial status and you find that your salary is not enough to even save, what you have to start to think about is seeing ways of increasing your salary. Do you have talents? Do you have, natural giftings that you can, commercialize to give you that income that you require? I mean, we all call it side hustle. There's just something that you have the capacity to do that can give you more money. So you need to be able to increase your income to be able to help you, because your income is your biggest financial planning tool. If you don't have an income, you don't have an earning from business or from salary, then how do you even talk about savings in the first place? Another question coming to me is, how do I get out of debt trying to save? Okay, so we'll be talking a lot about that. I mean, this is what this session is about, talking about how to get out of debt, how to even ensure that you have a good credit score, and how to even make your debt your priority. It's important that when you have debt and you're thinking about savings and building long-term wealth, you should give your debt, paying down on your debt a priority. You should look for ways of how to pay down, and just so that that extras that you need to save and to build and to plow into investments, you'll be able to afford and live the life that you desire. So how do we then create that balance in properly managing debt while ensuring that we build long-term wealth? You see, borrowing money to make major purchases may be a legitimate way to conduct your financial affairs. However, from a financial planning perspective, you should ask yourself two pertinent questions when considering it. First is, does making this purchase fit into my financial plans? And the next question should be, does the required debt service on the loan fit into my monthly cash flow? So your debt service is really the amount of money that you use in servicing the loan. And how do you get that? It is determined by adding up your monthly repayment for a year and divided by your net income. So if your answer is more than 20%, then it is not worth taking the debt. I know that in Nigeria, the debt service ratio is about 33%, but for purpose of financial planning, I will say 20%. If your repayment is over 20%, then it is not worth taking on that debt. This is to ensure that the loan is not costing you more than 20% of your earnings monthly. Perhaps the payment can be postponed until you can save towards it. That's what I say. I mean, if you have to pay more than 20% of your earnings to servicing a loan, then it's not worth getting embarking on that purchase. So my financial planning tip for you regarding debt is really to please only take on debt for assets and not for liabilities. Debt or credit should only be assessed for something that has the potential to earn you income. So if you were taking a debt to buy a house or to put into your business, expanding your business, knowing that you will get some income from it, then I would advise that. But I mean, taking on a debt for liability, for traveling, for buying clothes, for convenience, and all of that is not something I would encourage people to save towards all of those purchases. So secondly, avoid the possibility of future repayment shock by keeping in mind the following types of transactions for which you should not routinely or at least use for credit. So please, please, please avoid using credits to make basic living expenses. You have to be able to put out something from your income, no matter how little, for your living expenses. Living expenses include things like your feeding, transportation, utility, and all of that. Do not please take debt to service your living expenses. You have to be able to live a life within your income to be able to finance your living expenses. Do not make impulse purchases with credits. So you don't plan, you go to work, and then somebody just passes by and brings nice bags, nice shoes, nice hair with no plan, and then you take on that purchase. It's an impulse buying. And these people have a way of just making it very attractive by telling you, pay over 6 months. And you look at it and you're like, oh, 6 months, oh, I can spread that across my earnings, it won't put any pressure on my cash flow. But remember that you didn't plan, that's a debt, and it will keep hanging on you until you're able to pay off. So please do not make impulse purchases with credits, especially expensive ones. And also do not use credits for durable items or goods and services. So a good rule of the thumb for me would be to remember is to consider the use of loan. Is that you shouldn't even think about using debt to service your living expenses. Another rule is to keep your expenses as low as possible. And if you must make any expensive purchase, then plan towards it. If you have to make the purchase in 6 months or in 8 months, look at your cash flow and then begin to put money aside to build towards making that purchase. So now, if you must take loans, I really advise not taking it, but if you must take it, especially for business owners, entrepreneurs, at some point you may need to expand your business, start off a business, if you have to take on loan, then there will also be some things to look out for. So I'm going to be telling you giving you tips on steps in establishing a loan, especially as a business person. The first would be to open a current and a savings account. I mean, you have to appear business-like to lenders. They would like to know that you have some form of stability. You can't take on any debt if you don't have a bank account. You have to be able to put your documents together. You have to be able to talk about your business in a way that any bank will, or even family and friends will be able to lend and give you the money that you require. So I would say if you have to take on the debt. If you find out that you don't need the total amount of money that you have taken on as debt, what I would say is to open a money market account. So provide some form of liquidity for your debt, such that the interest on the money market account is helping you to service your debt. Another thing I would say, if you have to take on any debt, is to repay the loan promptly. Perhaps even before a little ahead of the scheduled time, because this puts you in a good light with lenders. Keep in mind that your ability to obtain a large loan in the future will depend in part on how you manage smaller ones in the past. So fulfill all the terms of your credit and be consistent in making payments promptly. So making a strong credit history is just as important as developing a solid employment record. So the same way you want to build a solid employment record is the same way you should look for very good ways of building a good credit history. So by using your credit wisely and repaying it in time, you're establishing a credit history that tells lenders that you're dependable, you're reliable, and you're a responsible borrower. In any case, whenever you foresee difficulty in meeting a monthly repayment, let your lender know. So usually you will speak to your banker and tell them that, look, you're not getting the sort of income that you're expecting, and work out something. Don't skip payments, just so that you're not penalized with default charges, which becomes more expensive. And as you keep incurring these charges, remember that is eating into your ability to be able to build long-term wealth in the future. So how much credit can you handle? Sound financial planning dictates that you need to have a good idea of how much credit you're comfortable to tolerate. Like I said earlier, your debt service should not be more than 20%. So let's put it in context. If you earn 100,000 and you're taking on any debt, so 20% of 100,000 is what? 20,000 naira. You should not service any loan that is above 20,000 naira monthly, since you earn 100,000. That's how the amount of money that you should take on for that should be calculated. So if you're just joining us, today we're speaking about the Balancing Act, which is managing debt and building long-term wealth. Let me go to the questions and see what questions I can take. You can keep bringing in your questions. So somebody is asking, how do you build long-term investment and how do you get out of debt? So I had listed giving you some tips earlier on how to get out of debt, just ensuring that you're not paying 20% of it, making it a priority. And also building a good credit history. We will be going into the second segment of the conversation, which talks about building long-term wealth. So I'll be answering your questions once we get onto that. Somebody is also asking that when it comes to diversifying one's portfolio, how would you determine where to make good performing investments? What kind of stocks, bonds, sectors, etc. Oh, okay, so this is investment. So for me, I would say from a financial planning perspective, it starts with setting your goals, understanding where you want to be. So this will then help your financial advisor to look for the valuable or the best instruments to invest your money in. You can say, oh, stocks is doing well now, let me go into stocks, and then the stock market crashes. Or you can say, oh, money market is doing 18% or 19% levels, let me put my money in it, and then something happens in the money market. So for me, it's really not in what instruments are doing well, but it starts with you. It's your objective. What is your horizon? What is your investment objective? What is your risk profile? So that forms the basis for zeroing in on any investment option. you can call us at FBN Quest Asset Management. You can go on the website and just, speak to one of our financial advisors, and we'll be able to work with you and understand your peculiar needs, and we can help define an investment strategy for you. Another question that is coming up here is, how do I build wealth when my debt takes on 85% of my paycheck? When you're there, I had mentioned earlier that once you start to pay over 20% of your income to servicing the debt, then it's not, I'm sorry to say this, but you're not in a good place at all. 85% is a lot of money going out of you in service and paycheck. So for somebody that has this issue, I think that what you should do is to make your debt a priority. You have to make it a priority. If you have to stop saving for now, just to ensure that you pay down on your debt. And I think that that's what you should do. 85% is a high amount. Bring it down as low as possible, and then you can start to think about savings and investments. Somebody's also asking that they're interested in where to invest with as little as $20. Oh yeah, the money market, FBN money market fund. It's a minimum investment of 5,000, which is less than 20,000. You can invest from anywhere in the world. All you need to do is go on our website, www.fbnquest.com, and request to speak to a financial advisor, read about our instruments, the money market fund, and you can, feel that we can connect you to a financial advisor. You can fill our forms and make the payments online to sign on with us. You also have access to your accounts online. You can view it from anywhere that you are in the world. So, in getting on to the second segment of our conversation today, building long-term wealth. What does it mean to build long-term wealth? So building long-term wealth requires proper planning and management of your financial resources. It's an intentional move. It's not, I posted something the other day on social media that the financial plan is not hope. Hope is not a financial plan. It's something that you need to work on. It's something that it's an action that needs to happen. So two words I mentioned, planning and management. It is how you carefully manage what you earn from salary or business. So remember that your earnings from business and salary is your biggest wealth building tool. So building long-term wealth begins with clarifying your goals, really, breaking them into time horizons and attaching monetary values to them. Where do I want to be? Your goals have to be span, they have to be specific, they have to be measurable, they have to be achievable, realistic, and time-bound. So it's not enough to say, I want to be rich. You have to set very smart goals by saying, I want to be worth 2 million in 2 years. I want to be worth 20 million in 10 years. Those are smart goals. So once you do that, break them into time horizons. Your short-term goals are your goals that you want to achieve within a year. I want to buy a car in 6 months. That's a short-term goal. I want to rent a house in 3 months. That's a short-term goal. I want to change the tires on my car in 4 months. That's a short-term goal. Your medium-term goals are your intermediate goals, and they're goals that you want to achieve within 2 to 5 years. And then your long-term goals are goals that you want to achieve from 6 years and above. So the first thing, like I said, define your goals, make them clear, make sure that they're smart, attach monetary values to them, break them into time horizons. The reason it's important for you to break your goals into time horizon is to help you understand the sorts of investment instruments, to put your money in. So if you're working with a financial advisor, they'll be able to say, so for example, if you had a short-term goal, and your short-term goal was to maybe build an emergency fund or to purchase a car in 6 to 12 months, then you'll probably be investing in short-term money market instruments, where your principal is preserved and you're able to earn stable income. If, on the other hand, if your goal is to earn a second degree, for example, in 6 years, then we will be looking at consistently building investments in assets that provide for capital gains over a long period of time, such as shares, equities, and bonds. I hope that this also answers the question about the best instruments to invest in. So it really starts with your goals, it starts with your time horizon and your risk profile. So beyond the above, the next thing is also to ascertain where you are now, So in building long-term wealth, after setting your goal, you need to be able to assess where you are now vis-a-vis where you want to be. And then in doing that, you'll be carrying out things like a net worth analysis, a cash flow analysis. Your net worth is simply your assets, which is all that you own, and your liabilities are all that you owe. So you subtract all that you own from all that you owe. And whatever you get is what your net worth is. Your cash flow, on the other hand, is really just putting together income, money that comes to you, and take out what goes out of you. So what you pay in terms of utility, rent, feeding, transportation, all of that is your outflow. So take out what comes to you in terms of salary, in terms of even investment income, what comes into you, and then take out what goes out of you. And what you're left with will be your cash deficit or your cash surplus. You want to ensure that your cash surplus is plowed into investments. So once you're able to do this exercise, you will then identify gaps in your finances and your general lifestyle that provide you with clarity as to specific plans best suited for you. So these are things that you can do with yourself. But I mean, if you want it handled professionally, you can speak with financial advisors. You can sit with you and help you do all of this, carry out all of this analysis. Then you'll be able to identify gaps. I will talk to you about typical gaps, that we have seen, or that we hear from clients trying to build wealth. So you will hear things like it may be that one of the identified gaps might be that your expenses far outweighs your income. So you do a cash flow and you find out that what is going out of you is much more than what is coming in. So what you then need to do is to do what you call an expense management. So see what takes money out of you. And the only way you can do this is to work on a budget. I mean, for me, that was an eye-opener where I had to put down everything put down everything that comes in and everything that goes out of me. I mean, even as little as the money you give out to people, put it down. You'll be able to see where the gaps are. So practical expense management may include things like cutting down on annual travel. So if you're traveling, for example, say 3 times in a year, you want to cut it down to maybe once in a year. Dining out, you want to reduce your transportation costs. It's expensive to move around in Lagos and certain cities in Nigeria and some places all over the world. So look for the cheapest way to move around. And if you really do, if it's not important, I mean, you could have people come over to see you. Yeah, bulk purchases is another way of managing the expenses. Buying in season, looking for bargain deals. Look for bargain deals. Look for when things are on sales, and then and back on such purchases. So those are good ways of managing your expenses. So other identified gaps may be a lack of emergency fund. What is an emergency fund? I mean, we keep talking about emergency fund. Your emergency fund typically is your 6 months income. So at any time T, for example, if you earn 100,000 on a monthly basis, in your emergency fund, you shall have a minimum of 600,000 in savings, in near cash investment. The belief is that if anything happens to you within six months, you should be able to get back on your feet. So it may be that and really your emergency fund is a priority. Please, if you don't have an emergency fund, you should look at ways of building your emergency fund. And the best way, or one of the best instruments you can use in quickly building an emergency fund, which you can build in 1 year, in 2 years, depending on how you want to make it a priority, is to use your money market investments, because they're safe, you're not losing your capital, and you're earning stable income on it. Another identified gaps, once you do your cash flows, your net worth analysis, and all of that, may be that you have insufficient savings or investments. So as your income begins to increase, so does the importance of savings and investment planning. So initially, people will first of all save to establish an emergency fund to meet unexpected expenses. So we must then deploy greater attention to investing excess income as a means of accumulating wealth, either for major expenditures such as a child education or retirement. So you have to look for ways of upping your savings and investment. If it was 10% going into savings and investment, maybe set a goal for yourself and say, you know what, 20%, let me increase it by another 10%, maybe 20% goes into savings and investment. And eventually, as you begin to accumulate or build your assets, then you start to build wealth. So wealth is when you have as many assets as possible. You have your fixed income assets, you have your equities assets, you have real estate. At this point, you can begin to say that you're building wealth. It's also important to prepare an annual cash budget by month, where you take into account estimated monthly cash receipts and cash expenses for the coming year, and then find out what the variance is. So your budget should be prepared on a cash basis. Your budget is not your cash flow. It is actually the net cash that comes to you, because it deals with estimated cash receipts and cash expenses, including savings and investments. So in your budget, you should allocate a portion to your savings and investment. The same way you do a budget and you say, 10% of this goes into feeding and 20% of this, you should allocate the portion that goes into savings and investment in your budget. And if you have a debt, I think that you should also allocate, make provisions for that in your budget as well. So another identified gaps may be insufficient income. I hear people say, I don't make a lot of money. How am I expected to save? So do things to increase your income, harness your passive income. I call it side hustle. What talents do you have? Look inwards. Do you write well? Do you make hair well? Do you talk well? Can you go for an event and be an MC? I mean, there's so many things. Look at what you have and use your talents, commercialize your talents, use it to make extra income, just because your income really is your biggest wealth building tool. Another gap may be that you lack or you do not have a risk management or insurance. So what you then do is to obtain adequate insurance coverage to reduce your financial risk and protect your income and assets. It's not enough to have assets. You have to be able to insure them. You have to ensure that nothing happens to them. It's not enough to buy a car and not have a comprehensive insurance, for that car. So as you begin to accumulate assets, you find that it's also important to begin to build risk management around them. So see what insurance cover you can take to protect your assets. So another gap may be that you're too high on illiquid assets compared to your liquid assets. So in that case, what you'll then be doing is what you call a portfolio rationalization. So you find out that some people are heavily weighted on real estate and they do not have liquid cash. We say cash is king, yeah? So if anything happens and you need to quickly put down the cash, you find out that your real estate may take you. I'm not saying real estate is a fantastic asset class, but it may take you from day 1 to day 100 to dispose of a real estate asset, So in doing your cash, in assessing your current situation, it may be that is where the gap is. So you may think about how to then, rationalize your portfolio. Maybe you're at a later stage of your lifestyle and you're still holding a lot of investments in equities. We may be thinking of liquidating, creating liquidity and putting some of those in money market, investments that will give you the liquid cash that you require. Those are some gaps that we identify. Another gap that may be identified in working out, in doing all of this analysis, may be that you're heavily weighted on debt, excess debt. So we have to structure. I've spoken a lot about that earlier. Structure ways of paying down on your debt. Please make paying down your debt a priority. Remember that paying your debt quickly can help provide the cash surplus that can be plowed into acquiring more investments. And the financial advisor, really sitting with a financial advisor and explaining your peculiar situation with them can help you, with all of that. So if you're just joining us, welcome to our webinar today, where we're speaking about balancing act, living above debt, managing our debt, and still being able to build long-term wealth. Let me look at questions that have come up and let me see if I can provide some insights. So somebody has said that, what does it take to create long-term wealth as an artisan? Okay, so it really doesn't matter how much you earn, from 5,000 to 10,000 to 20,000. I say that building wealth, long-term wealth, is a deliberate act, is something that you need to make a priority. You have to ensure that at least the 10 to 20% of whatever comes to you goes into some form of investment. So putting it into context, if you earn 20,000 naira, for example, because I know minimum wage in Nigeria is 18,000. So if you earn 20,000 monthly, the 10% of that is 2,000 naira. Should still be able to, I mean, you can spend 2,000 naira on something without even thinking about it. She'll still be able to go into some form of investment. Mind you, there are investments that we have. The money market investment, for example, it's a minimum of 5,000 naira. That's below $20, and I think that can be afforded. That's affordable by a lot of people. So when we talk investments, we're not talking in the millions. Yeah, investment that you can access with as little as 5,000 naira. So another question that came up is, how should repayment for assets be? Hold on, repayment for assets. Should one take? How long should repayment for assets? Okay. Okay. I couldn't quite understand that. Okay, somebody was asking me about how you can increase your credits, you improve your credit score. Just ensure in improving your credit score, just ensure that you're meeting with your payment deadlines, with your repayments. Do not default on your payments. And so and that will ensure that you keep having a good credit score. Make sure you stick to your payments. If you're having difficulty in meeting up with your payments, please liaise with your lender, and you'll be able to structure ways on how to make it a bit more flexible and affordable for you. So somebody's asking, minimum savings to create long-term wealth, to start investing, which organization? Oh, okay. So I'm speaking from FBN Quest. So FBN Quest Asset Management. You can go to our website, www.fbnquest.com, and ask to speak to a financial advisor, and we'll be able to work with you in understanding your unique needs and providing the solution that you require. So somebody is also asking that the best investment for a 31-year-old with kids. I had said earlier that the investment should really start with understanding your unique needs, where you are in your financial life cycle. So what may appeal to somebody may not really appeal to you. It really just depends on your own peculiar situation. So which is why it's good to speak with an advisor and tell them what your long-term plans and what your goals are. We do an analysis, and then we'll be able to work you through the best investment options for you. So the steps I had discussed above, in analyzing your unique needs and then finding out gaps and then really dealing with those gaps, some of the things that can help you with building long-term wealth. So I've been talking about, speaking with a financial advisor and all of that. Like I mentioned, FBN Quest FBN Quest Merchant Bank is part of the FBN Holdings PLC, one of the strongest and most dependable financial groups in Africa. And what we do really is to offer a range of investment products and services with strategies spanning various asset classes and sectors. So we work closely with clients to identify the best opportunities that can help shape their investment portfolios and goals. At FBN Quest Asset Management, we provide customized solutions to clients. So it's not an all size fits all. We sit with you and understand where you're coming from, and we prefer the right solution to meet your unique needs. And we're able to do all of this through 4 core areas or 4 core offerings. So we offer what you call mutual funds. All our mutual funds are regulated by Securities and Exchange Commission. We also offer direct discretionary portfolio management to clients, where we sit with them and we have an agreement on their portfolio structure. We offer what you call liquidity management, which mirrors your fixed deposits in banks, where you're able to place money and then earn income on it, and also structured products. So structured product including things like Eurobonds, commercial papers. So in my conversation with you today, I'm going to limit it to just discussing the mutual funds. If you require more information, please visit our website. I've been talking about it, www.fbnquest.com, to get as much information as you can, insight as to products that we have available and how we can really just work with you. So what are mutual funds? I know that a lot of us have been hearing, and when you hear mutual funds, it's not a lot of money that is involved. They have made a name, mutual funds have made a name for being one of the simplest and most affordable ways for individual investors to realize their short, medium, and long-term goals. Remember, I had spoken earlier about short, medium, and long-term goals. Mutual fund is an investment vehicle that allows you, an investor, to combine your money with that of other investors seeking a similar investment outcome, and then have a professional investment manager use their skills to manage the money to achieve the stated outcomes. So the investment manager invests in different instruments such as cash, treasury bills, bonds, equities. So you're still able to, with a mutual fund, you're still able to have exposure into all of these investment instruments. So to create and manage your diversified portfolio, you will typically need a lot of capital and even market understanding. But what happens in the mutual fund is that you have an expert, the portfolio manager, who has very strong market knowledge, is constantly just helping to review the market and sweating the portfolio as much as possible to ensure that the best returns, is received from the mutual funds. So mutual funds are affordable and can help you to meet investment goals such as your savings towards asset purchases and other spendings. And such spendings may include, for instance, things like payment of your house rent, buying a car, paying for a wedding, saving for children's education, a vacation, or even retirement. So mutual funds pay distributions quarterly, distribution meaning the return that you earn on it. So mutual funds pay quarterly, semi-annually, or annually, depending on the mutual fund that you invest in. And you can enjoy a variety of different mutual funds. In FBN Quest, we manage 5 mutual funds. And like I said, they're all regulated by Securities and Exchange Commission. But in this conversation, I'm going to limit my our discussion today to talking to you about 3 major mutual funds. The first of it will be the FBN Money Market Fund. It's our bestseller, and it's one of the ones that a lot of people patronize. The FBN Money Market Fund will typically invest in a broad range of money market security, as the name goes, and the underlying assets are treasury bills, commercial papers, bank placements. The fund aims to provide stable liquidity while preserving capital. So, for example, you have a short-term goal where you cannot deal with volatility, losing your capital. You can then invest in the money market fund. The minimum investment, like I had said, is 5,000 naira, less than $20. Distributions are paid on the money market fund every quarter to investors. The FBN Money Market Fund can be used to achieve your short-term goals, things like building your emergency fund for a wedding, for school fees, as against putting money in your current account or your savings account. I mean, you can throw that cash into your money market fund. You have this open-ended, so you can have access to your cash anytime that you wish. You can use it to save towards travel. If you want to travel by Christmas, this is the time to begin to put money in your money market fund. And you can use it for car purchase, or even payment of your house rent. So you get some money in, and instead of keeping it in a current account, you need to pay your house rent in 3 months and 6 months, you can use your money market fund to invest. You can invest in the money market fund. You can invest such funds in the money market fund. The next fund I will talk to you about is the FBN Eurobond Fund. The FBN Eurobond Fund is a fixed income mutual fund that provides income and capital appreciation by investing in US dollar denominated debt instruments. You know, in Nigeria, just having dollar in itself sitting in a dorm account is an investment. And then you now have an investment that is able to give you some returns on your dollar. So I think that this is fantastic. To get started with this, just simply invest with it. To get started on the FBN Eurobond Fund, the minimum investment is $2,500. The Eurobond fund will help investors who wish to mitigate their FX, their foreign exchange risk, and diversify wealth. If you also have future expenses in USD, for example, you want to pay, you have fees to pay in USD, then this is the right fund for you. If you earn in USD, this is also the right fund for you. The third mutual fund is the Smart Beta Fund. The Smart Beta Fund provides long-term capital appreciation by investing in listed stocks across all sectors of the Nigerian Stock Exchange. If you go to a stockbroking house, for example, right now, and you want to invest in stocks, they'll probably be asking you for a minimum of 501 million. But the minimum investment for the Smart Beta Fund is as low as 50,000 naira, and it will give you that exposure to stocks in the Nigerian Stock Exchange. All of these funds have consistently performed above their benchmark. For example, the Smart Beta did far above its benchmark last year, and they've consistently done that. So if you need to invest in any of these funds, you can speak to us at FBN Quest, and we will walk you through how it works based on your unique circumstances. So before we leave, I would like to, as usual, just give you some personal financial planning tips that you can take home with. The first will be to avoid loans like a plague, if possible. Avoid loans, save up for expenses, and if you must access a loan, please take time to review the terms. Ensure your repayment is not more than 20%. Please, if you don't take anything out of my conversation today, go home with the 20%. Your repayment should not be more than 20%, even though the standard for Nigerian banks is 33% debt service. But you should, for financial planning purposes, it should have been more than 20% of your monthly net pay. And please pay it as fast as you can, just so that you can keep having a good credit score. Make a budget and use it to help set financial goals and to monitor your expenses. Spend cash, don't rely on cards. It's easy to, just swipe your card and all of that without even thinking about the money that is involved. But when you actually count your cash, you feel the amount of money leaving you. Have someone hold you accountable. Share your financial dreams with someone you have similar values with. It may be a spouse, it may be a friend, a sister, colleague, whoever you share the same values with, somebody that can hold you accountable, just so that when you want to make those impulse purchases, somebody is saying, you have this plan, and can keep you in check. Before you buy, consider the alternatives, sleep over it, and avoid impulse purchases. Stick to your budget. When you go shopping, do a budget and stick to it. Please, please, please don't keep up with the Joneses or Hiltons. Feel good about who you are always, and always be yourself. When you get paid, save first and then pay your bills. It was Warren Buffett that says, save first and then do other things, pay your bills later. So pay yourself first by saving. That's the way to pay yourself. So do your savings first. If it's a 20% of your income, make sure that goes into your savings first before doing other things. If you leave it till later, then something else, money always has a way of leaving us. Something else will come up that will take on, that will be priority. Some form of emergency, something else, something will always come up that we need to use money for. So when you get your income from savings, from business, please save first and then pay your bills. Save your raise or bonus or excess cash or windfall received. Don't go on a shopping spree. Something suddenly comes and you get a bonus, and that's when you're thinking of quickly booking a ticket or doing all of those things. Please save your windfall cash. If money comes to you, unexpected cash, put it into investment. Reduce your bills by being more efficient. I say this all the time. Little things can add up. Things like your energy bulbs, turning down your AC, doing bulk purchases, all of these little things, add up to helping to build your long-term wealth. Buy in season, like I had said earlier. Make sure you look for deals. Go out and look for the best deals. It's okay to buy when sales. It's your way of saving for your future. And then book your travel tickets in advance if you must travel. Stay on budget when you have to go on a trip. Make sure you travel with just the amount that you need, just a little extras for eventualities. And then keep ramping up your investments and remain financially literate. Maintain a healthy lifestyle. We can't do all of this. We can't save up and not have the lifestyle to be able to, enjoy that life of your dreams. So maintain a healthy lifestyle, keep up with your exercises, good diet. And then once in a while, splurge. I mean, if you've met your investment goal, pay yourself. You've worked so hard, and you need to be able to pay yourself for all of that. So 2 questions that have come up. Let me see. I'm trying to see what questions I have. Okay, so somebody's asking alternatives to money market with higher interest rates. Alternatives to money market with higher interest rates. Your commercial paper is also a form of money markets. So money markets are instruments that mature within a year. Right now, because commercial papers, because you're lending to corporates, is seen as a little bit of a higher risk. So you can get a little bit more of return from investing in commercial papers, much more than you'll get from typically investing in treasury bills. So your commercial papers can give you a higher rate than the other money market instruments. Let me see if there's another question coming in. Can you automate money market? I'm finding it a bit difficult to read. Can you automate payment for money market? How to do? Can you automate payments for money market? Yes. Can you automate payments from money markets? Yes, you can do that. You can automate your payments from money market. We have even, at FBN Quest, we have a mobile app. It's coming up that you can do all of that. We haven't gone live yet, but that will happen very soon. So you can automate your payment. You can speak to your bank and just set up a direct debit, really, in place where, that can give you that form of discipline that you require. If you know that you're able to really, embark on that savings journey. So set up structures, set up a direct debit, so before the money comes into you, it's gone out into savings and investment. I hope that I have been able to answer most of your questions today, and we have been able to provide insight as to how to manage your debt and how to build long-term wealth. I know that this webinar would remain online. You can check on the She Leads YouTube channel to watch it over and over again, and just, listen over and over to all the things that we have spoken about. If you have questions about investments, if you have unique needs that you want us to talk about, please get in touch with us at FBN Quest, www.fbnquest.com, and ask to speak with a financial advisor. Also tweet at us at FBN Quest and at She Leads Africa. You can also search for me on my Instagram page, Invest with Emma, and we can take it on from there. Thank you and have a good day. Bye.